Lunch. Joining us in the studio now is Nigel Townshend, the Chief Executive Officer of TWP, a business that listed on the JSE in November last year. The shares have certainly done very well, up 50% from the placement price. But I know that TWP was very active at the mining in Durban this year. I saw Dean Cunningham in the corridors. And you do say that your order book is looking pretty robust. Just how significant a part did mining in Durban play in the greater scheme of things?
Thanks, Byron. Mining in Durban is one of the shows that we exhibit on a global basis. Being an African-based company, it's probably one of the most important. I think this year there were something like 4,000 delegates there. But we also go to Mines and Money in London, and we exhibit in Australia as well, both in Perth and at Diggers and Dealers. But you talked about our order book. Since we listed with an order book, a project pipeline of about 45 to 50 billion rands worth of projects, which we were directly looking after on behalf of our clients. That has actually increased now to 70 to 75 billion. So it's almost a 50% increase in the order book. So to answer your question simply, how important was Indaba? Very important.
Well, so the prospects going forward certainly look very healthy, but let's focus on those maiden year-end numbers that you put out yesterday. Revenue more than doubling, gross margins looking really healthy at 20% compared with just over 15% in 2007. What essentially was that a function of?
It's a function of two things. It's firstly a function of some economies of scale. As the group gets bigger, we're able to utilize our resources and our people better. It's also somewhat a function of working through the system the last of our projects and the last of our contracts which we had with CPI inflation clauses. You've probably noticed that in the construction and the engineering industries, we've been experiencing very, very high inflation in raw materials, in construction costs, and we've been feeling that as well because of the skill shortage. And our costs have been going up much higher than CPI. So it's really getting rid of the last of those contracts where we were linked into CPI or CPI plus 1 or 2%.
Now, you listed in November last year, and those that supported your placement would have done very nicely, up in the order of 50-odd%. So are they still supporters, or have some of them been tempted to cash out at that level of return?
I think the people who were behind us, which primarily the major institutions at this point in time, are still behind us. I think a number of the funds, or the hedge funds, have probably taken their profits. I think with the downturn earlier this year, that was probably to be expected. But we're very, very bullish on the future as well. The figures you mentioned this year, we're forecasting at least another 80% increase in the current financial year.
Just looking at your pre-listing forecast for the current financial year, which is 2008-2009, 1 billion rand in turnover, headline earnings per share of 158 cents. And considering that you managed to beat your targets for the 2008 financial year, just how much of a stretch is it going to be to get there in 2009?
We don't believe it's much of a stretch at all. Throughout the 2007-2008 financial year, we had a number of start-up operations. They really only started kicking into the bottom line towards the end of the year. In the years forward, the 2009 financial year, those start-up operations will be well bedded down and are really going to contribute to the bottom line of the organisation.
In what sort of manner, and when do you expect that to happen? Some of those start-ups include the likes of TWP, Eurasia, and TRG Trading.
Those are two of them. They're still very, very small in the bigger scheme of things, and we're going to see how we're going to take that forwards. But core to our business, if we take TWP Australia, we only started TWP Australia last April. It actually generated a profit in its first year of operation. Now, that's quite something for a brand new startup company. Its size has already grown to 60 people in the Perth office. We're looking at expanding to Brisbane. So operations like TWP Australia and our hydrometallurgical specialist plant and refinery company, TMP, we really see coming along very strongly in the current financial year and the years after.
It's been no secret that the mining industry in South Africa certainly had its challenges, particularly this year with the added headache of the power crisis. How does that impact a mining services company like TWP, or does it just present a number of wonderful opportunities?
It would be inappropriate for me to say that the problems with the power supply and Eskom haven't had an impact. They have had an impact. They've had an impact on the industry. They've had an impact on TWP. Primarily, it's an impact of perception and confidence in the market. However, having said that, where metal prices are at the moment, particularly in the South African market, the platinum prices, nudging $2,000 an ounce again, over $2,000 an ounce earlier this year, that's very healthy margins. We've looked at all the projects which we're working on, and alternative energy supplies, even if you take pessimistic scenarios, still don't make those projects unfeasible. Because they're also long-term projects, and we're looking, some of the longest-term projects that we're involved in go to 2016. We're looking at medium-term solutions, short and medium-term solutions to the supply issues during the construction phases. So we can get around that, albeit at a high cost, with alternative fuels such as diesel. However, it does also present opportunities which we're busy investigating at the moment for alternative supplies, particularly solar is one which we find very attractive at the moment.
Let's move on and talk about TWP Finance. We had the CEO of that business on this channel, Dean Cunningham, I think it was back in March, talking about the 5% strategic stake that you bought in African Eagle Resources. The plan is to up that to around 20 to 25% over the next 12 months. Is that still on track, and has it opened the doors that you had hoped in the first place?
Yes, certainly, and that's still on track. I think Dean would have made it reasonably clear that the intention of TWP Finance is to assemble a key portfolio of investments, good, solid mining projects in various stages of development, from feasibility through to actual early stage and production projects. We find African Eagle fits into that model as part of the model. It's by no means the whole of the model, and their projects actually add value, and the intention is, as Dean said, to actually take TWP Finance and list that separately.
Now, why the bullish confidence in African Eagle Resources in the first place, if you do get yourselves up to that 20 to 25% stake?
They've got a very attractive range of projects. They've got something like 12 feasibilities or near-term production projects in strategic commodities in a number of countries which have very stable political regimes, the likes of Zambia, Tanzania, and we believe that the full value of those projects hasn't actually been realized by the market, and that's where we come in. We can leverage our intellectual capital to turn those projects to account.
Nigel Townshend, the Chief Executive Officer of TWP, the business that did beat pre-listing forecast in 2008, and Nigel Townshend just telling us that it's not going to be too difficult to beat the forecast for 2009. Right, that's all from Power Lunch in association with MoneyWeb. We're crossing now to CNBC US for US Squawk Box, CNBC Africa back at 4 p.m. Central African Time with Regional Roundup.